Welcome to Java and thank you kindly for joining again. It's October 31st, 2025. It is also Halloween. We've got a lot to cover today. I want to get through as much as possible with no garbage in between and no ads. So if you would like this video, would be much appreciated. Now we've got a very conflicting environment in the markets, starting with inflation versus deflation. These are huge warring factors behind what we're watching with this momentum shift. We'll go into a little bit more of what's driving that in a bit. Spending versus savings. In this case, we've got spending. Savings will be the end of it, and that is as the middle class runs out of their savings. We've got a two-tier society going on. We've got a no hiring yet no firing, and this is a driver behind the unemployment, which will be rising soon. We'll cover that as well as a lot of the drivers behind what we're seeing forward. So let's get started, as always, with what's going on in the market. We've got fear grade meter in fear territory. Typically, this would be up by the dip as others are fearful. However, what do you purchase at this point in time? There's a lot of caution towards this. As we're watching this shift, we're going to watch serious spikes both to the upside and to the downside in this market going forward because of these warring factors. So 10-year yield at this moment is up a bit. That means that money flowing out of bonds, dollar getting a little bit stronger. So yesterday had some issues with the earnings and a few other things going on, as well as the Powell effect. So stock market took a hit. Futures are showing it's going to have a bit of recovering from some other Mag 7 earnings. Apple is going to be the focus for today. We've got silver and gold under a little bit of pressure, but they're really kind of staying steady at the moment. We'll be watching them. Crude oil we'll talk about. Cryptocurrencies having a bit of strength right now. They're recovering from yesterday. So just saying that there could be included weakness a little bit further. If Bitcoin drops below 100,000, I just want to remind you of what Germany did. Don't be Germany and sell at the bottom, because there's a lot of strong support there. We've got a lot of things going forward. Now, our daily driver is we've still got this Mag 7 carry on their forward spending. They've got massive spending forward, so it doesn't matter what their earnings are right now. This is a very polar, should say bipolar market, because it's not got a lot of meat in the middle, if you will. It is very split. So one of the main things going on with geopolitical is the government shutdown. They're talking about a filibuster ender that would allow them to kind of end things by declaring this emergency. We'll see what happens with that. If they do, markets could do that spike rally with any of this, very headline dependent. Now, we've got the Fed talking about easing the debt concerns with their plan to end their quantitative tightening, and they're going to purchase more bonds. And in short, they're buying their own debt and they're going to expand this. So as they expand purchasing their own debt, they're also rolling off mortgage-backed securities. Talked about this yesterday. This is going to affect real estate market. Now, one of the reasons that people are still very long this market, as well as purchasing bonds, is what we call TINA. There is no alternative, because inflation is increasing at a rate to where if you pull everything off into cash, you're guaranteed to lose a significant amount in this inflation effect, which is, in short, theft that you don't vote on. This is something that just they are going to devalue your cash, and they don't have to go in your safe where you've got your dollars. As they're losing value, they are using this devaluation of your cash. Now, artificial intelligence led investments are driving US economic growth. This is a headline. I don't believe that there's a massive amount of growth. There is some between the data center builds and the chip sector, but the economy as a whole, it is not filtering down to the middle class or the lower class even, although subsidies will be in the works. So they will filter down to the lower class in order to keep them there, because when you give them money, it suppresses their freedom. It works to the opposite effect. On the other side, we've got the Bitcoin mining industry is financing artificial intelligence gold rush with convertible bond boom. So more debt coming from different ways. We're just converting this debt and pushing this game forward. So for the moment, that's why I say we've got some long spikes happening in the market. But caution, because there are, as I said, these massive shifts coming in. Now, what really is driving the economy is war and defense spending. Anduril is now opening a factory in Australia. They're going to build what they're calling undersea ghost shark drones. Now, think of the location, why it is being built there, and that is what you can expect forward. There's a lot to deduce from this. I'm not going to speak about this because I want this video to get out. I want to talk a little bit more about this uh, the debt snowball that is coming. So, as they're pushing all of this debt forward, doing convertible bonds, Meta yesterday, massive company worth billions. Yet, what did they do? Issued more bonds, more debt for their capital expenditures forward. They're saying this is driving the economy, but it's all on debt. That should be a red flag to anyone that understands what is going on here. We've got the private equity sector is showing massive cracks as well. So this is pushing forward companies to these massive valuations that they really don't have any business being. That's why they're talking about the bubble being where it is. Now, it's not a problem if it can be produced up to the debt. So the reality of the economy producing up to this could maintain it, but that is not what we're seeing. So this debt, as it comes through, it is going to have to be rolled forward. So what is happening is this is just going to be more massive inflation as these huge multi-billion dollar companies are taking all of the financing and the value of the currency up front, and you are getting left with the inflation. So, with this in mind, purchasing real assets at this time, which includes good quality stocks, however, those are getting a little bit more difficult to find. So, shifting into other assets is highly recommended. We'll talk about a few of those. Now, the calendar. We've got a long list of reports we're not going to get, should be getting PMI. We're going to see what happens with this. So, case in point, soybeans. They dumped precipitously once this issue with China said they were not going to purchase any. Multiple farmers about to go bankrupt on the verge. All of a sudden, there's a deal and they spiked. So, did you get a piece of the big, beautiful soybean billions? Now, someone else was talking about the vehicle industry. And what happened was Trump had tweeted out after the deal with Japan to buy a Toyota. So I said that because those were his words. Now, all of a sudden, Toyota does not face immediate chip shortage from the Nexperia issue. Now, Nexperia is a Dutch company. However, they are sanctioned. So very convenient that they are exempt from this, not going to have an issue. Now we are shifting to stable coins. Western Union, I spoke about them before. This is the third time they're now plotting stable coins to do their cross country currency shift. They've now got their own. So watching that again, Meta selling $30 billion of bonds as the artificial intelligence frenzy, which I think is appropriate at this point in time, fueling record orders. Now, I do believe that artificial intelligence is going to be massive moving forward. I do believe that is the age. However, the accelerant right now it has to have time for it to catch up, and it's not there yet. So a lot of these bonds, a lot of this debt going between two places. One is private credit, the other is Federal Reserve is picking it up. So with these treasuries, this is going directly to the taxpayer via inflation. Private credit, once it busts, it is going, this is higher risk at the moment. Once it busts, will be subsidized and again go to taxpayer under their inflation. So I like to talk about the underlying economy. Now this, I had posted this a day or two before, but we're going to watch this accelerate. This is layoff announcements, and these are not hundreds, these are thousands, tens of thousands in some cases that they are laying off, and it will increase going forward. So the question is, all of the spending forward, all of the artificial intelligence, who will be utilizing the services if they don't have a job, if they don't have employment? Now, Ford, back in the day, once made a statement that he was paying employees very well, and there was an argument that he could pay them less, but he was saying that he wanted his employees to be able to afford the product. That shifted them forward. So this is case point for the reverse. Once no one can afford to purchase, whether it's services or supplies, that's when we're going to see the deflationary point. All of a sudden, demand drops precipitously, and this will all happen at once. It will be the elevator down. So I want to talk a little bit more about the underpinning of a lot of this is energy. The main component still of energy is oil. So under sanctions, we've got the Russian Lukoil. This two of their largest corporations is Lukoil and the Rosneft. So they have accepted an offer to sell their international side of their business, not the core, but they're selling off massive amounts. The sanctions have worked with the pressure. Now, why am I saying this? Because this is the reality of what's going forward and why oil has been suppressed massively. The point of it was to crush Russian oil because we've got Chevron beating estimates, Exxon and Chevron boosting their output despite the falling prices. This was the whole point of this. This is a silent resource war that we're fighting, and this resource war will continue forward. So I just want you to accept and understand this. The pricing of everything, a large portion of inflation will be dictated by energy. So once this starts to accelerate, you can accept more inflation again. So as we see more inflation, there's going to be more separation, like oil and water, and the middle class will get sorted out because it will be those that rise to the top and everyone else. So just want to put this out there clearly. I know that it is a holiday for many, if you will, but going into this new month and the closeout, what we're looking at, we're going into a very volatile season. Will there be a Santa Claus rally? Very possibly, very possibly. Short term, but just urging caution with what you're looking at forward. So with this, I wish you all a wonderful day. And until I see you again, resist.